Hello everyone and welcome back to Explain the Charts. Today is October 9th, 2025, and we are taking an in-depth look at one of the market's biggest players, Microsoft, ticker symbol Microsoft. In this video, we'll cover the crucial news driving the stock and then dive deep into the charts to identify key levels and potential future price action. As you can see on the daily chart, Microsoft has been in a powerful uptrend for well over a year, but has experienced some significant volatility recently. Let's start by unpacking the news that's been influencing this price action. Fundamentally, the sentiment around Microsoft remains overwhelmingly positive, largely fueled by its dominance in the AI space. Just last week, on October 1st, Morgan Stanley reiterated their confidence by lifting their price target to a hefty $625, citing Azure's impressive growth and AI integration. Similarly, Zacks currently has Microsoft rated as a buy, pointing to strong earnings growth and upward estimate revisions from multiple analysts. Perhaps the most bullish take came from a Mizuho analyst on October 3rd, who called the stock free money when it was trading near $515, suggesting Wall Street was overreacting to long-term concerns. Positive short-term news also came from the company squashing rumors about exiting the Xbox console business, which gave the stock a small boost just a few days ago. However, it's not all smooth sailing. There are some headwinds to consider. If we look back to early September, we can see a sharp drop in price. This move was partly triggered by the announcement of new tariffs on foreign-made semiconductors, which could increase costs for Microsoft's massive data center and AI infrastructure. This was compounded by a weaker-than-expected August jobs report, which caused a broader market sell-off and dragged Microsoft down with it. You can see this reflected on the chart with that significant red candle on September 5th, where the stock dropped nearly 3%. There are also ongoing concerns regarding Microsoft's key partner, OpenAI. News emerged in mid-September that OpenAI plans to drastically cut its revenue share with partners from 20% down to 8% by 2030. While the market initially shrugged this off, as seen by the stock surge on September 12th, it remains a long-term risk factor that investors are watching closely. Analysts believe the benefits of AI integration across Microsoft's entire ecosystem will far outweigh this direct revenue reduction, but it adds an element of uncertainty. Now, let's transition fully to the technicals, starting with the big picture on the daily chart. The primary long-term trend is clearly bullish. However, we can see a major peak was established on July 31st, when the stock hit its 52-week high of $555.45. This level now stands as the most significant resistance target for the bulls. Following that peak, the stock experienced a sharp pullback through August, finding a bottom and establishing support in the $500 to $510 range. The absolute floor for this stock over the last year was set back in early April, when it bottomed out around $345. While we are trading far above that now, it's a critical long-term support level to keep in the back of your mind. More recently, the September sell-off found support right around the $495 level before bouncing back. This reinforces the area between $495 and $500 as a very strong psychological and technical support zone. Any retest of this area would be a major decision point for the stock. Looking at the current action, after rebounding from the September lows, the price has been consolidating. For the past week, we've been trading mostly sideways, with the price hovering around the $524 mark. The bulls successfully pushed the price up to nearly $530 on October 6th, but were rejected. This $530 level is now our immediate short-term resistance. A convincing break and hold above $530 would be a very bullish signal. Now let's switch to the hourly chart to get a clearer view of this recent consolidation. We can see the price action has been contained within a relatively tight range for the last couple of days. The upper boundary is that $530 resistance we just mentioned from October 6th. The lower boundary of this short-term range appears to be around the $521 to $523 area, which has been tested multiple times yesterday and the day before. The price is currently caught between these two key levels. Volume on the hourly chart has been tapering off during this consolidation, which is typical. This often suggests that a larger move is building up. Traders should watch for a spike in volume accompanying a breakout in either direction. A high-volume move above $530 would indicate strong buying pressure and likely continuation to the upside. Conversely, a high-volume break below $521 would signal that sellers have taken control in the short term. For an even closer look, let's drill down to the 15-minute chart for yesterday's session on October 8th. Here you can see the intraday battle very clearly. The price oscillated between roughly $523 and $527 for most of the day. This extremely tight range shows indecision in the market at this price level. A break from such a narrow range often precedes a quick, sharp move as stop losses are triggered and breakout traders jump in. This microview reinforces the importance of the $521 support and $530 resistance levels we identified on the hourly chart. So let's recap the key takeaways and formulate a plan. The long-term trend is undeniably bullish, supported by strong fundamentals in the AI sector and positive analyst ratings. However, the stock is currently in a short-term consolidation phase after being rejected from the $530 level. The most important price levels to watch are resistance at $530 and the all-time high near $555. On the downside, key support lies at $521, followed by the major zone between $495 and $500. Here are the potential scenarios as I see them. The bullish scenario, which I believe has about a 65% probability, involves a breakout above the $530 resistance level in the coming days. This would be reinforced by positive market sentiment or a company-specific catalyst. If this occurs, the next logical target would be a retest of the all-time high around $555. Traders looking for a long entry might wait for a confirmed break and retest of the $530 level. The bearish scenario, with a 35% probability, would see the price break below the $521 support. This could be triggered by negative macroeconomic news or renewed concerns over tariffs. A break here would likely lead to a test of the critical $500 to $495 support zone. A failure to hold $495 would be a significant bearish development and signal a potential trend reversal. Keep an eye on upcoming earnings reports and any new developments in the AI space, as these will be major catalysts for Microsoft's next big move. Remember, this is not financial advice. Always conduct your own research and analysis before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.